Good morning, everybody. Happy Thursday. It's May 30th, 2024. Great to be with all of you today. My name is Bob Lang, and it's our first daily bite of the week because Monday, of course, was a holiday, Memorial Day. Thank you to all the men and women who served in our military today and yesterday. So let's talk a little bit about the markets here. We really had a huge stumble yesterday. Markets were down mostly from the start of trading and stayed down all day long, closed near the lows of the session as well too. Let's take a look at that chart here for a minute, what the action looked like yesterday. And so here you can see here's the day of trading yesterday. We fell sharply on at the open here, rallied a little bit, but basically went sideways and closed poorly right at the end of the day, right to the lows. And then overnight, of course, stocks were down sharply following a missed earnings on revenue and guidance from Salesforce, which is a big software company and is also in the Dow Industrials, which is why the Dow is down 300 right now. It is one of the largest components in the industrials by price. Of course, Dow Industrials is a price-weighted index, not a cap-weighted index. So the names that have the highest prices have the biggest influence. Of course, the biggest one in the Dow Industrials is what? It's United Health, right? It's over $500 a share, and when that moves big, that tends to move the industrials. So Salesforce being about $280 a share before the close yesterday is also quite influential in moving the Dow Industrial. So that stock's down, that index is down, that stock is down sharply today, about 15%. But overnight, we didn't see a whole heck of a lot of movement. We did trade all the way down to 52.50 on the futures, which was down about 34 handles. And we've rallied back a little bit from there, and we're only down about 13 handles. Just had some economic data that came out at 8:30 this morning, and it showed that the GDP came in a little bit from the first quarter, came in a little bit less than expensive. Of course, this is rear view mirror stuff. This was stuff that was reported earlier in the quarter back at the end of April, and this pretty much blocked from the beginning of January to the end of March. Came in at 1.3%, expected to be about 1.6. We also saw a price deflator at 3.1. This is an important number because this is basically the inflation that occurred in the first quarter. The GDP deflator at 3.1%, still too hot for what the Fed is looking for in terms of bringing inflation down. Jobless claims came in it looks like slightly higher than expected at 222,500. PCE prices, personal consumption expenditures, came in at 3.3%, a little bit lower than expected, but again, far too hot for the Fed to start considering cutting interest rates at any time in 2024, right? So these numbers have to start heading downward. We may get a good print in CPI number coming up in about 2 weeks. That'll be the May number today. Tomorrow, of course, is the last day of trading, last day of business in the month of May. We start June on Monday, which is on June 3rd. But why am I saying that the print for inflation is going to be better? Well, take a look at this. Cleveland Federal Reserve Bank does what's called an inflation nowcasting. So they basically take a lot of components that they think make up what the CPI is going to look like, the personal consumption expenditure, the core for both of those numbers, and they come up with they have a formula, they come up with a composite number with an estimate of what they think the inflation number is going to look like ahead of time. So if we take a look at their estimate for May, which was last updated yesterday, take a look. 0.8 month over month. What does that mean? If we annualize that out, we multiply it times 12, that comes out to be about, about 1%. little less than 1%. So on average, this is 0.08. Okay, so that is a very, very low reading, basically coming in flat for the month of May, right? Core number coming in, they're estimating it coming in at 0.3. The PCE, a much better number, 0.1, and that comes in, that if you extrapolate that out, this is a month over month, extrapolate that out for a whole year, that's about 1.2%, moving in the right direction. Okay, core PCE, same deal, about 2.7, 2.8% core PCE. Again, still too hot, but moving in the right direction. So we'll see if these numbers come in, and these are important figures. If the Cleveland Fed is right in their estimate, we're going to start seeing people talking about, and maybe even the Fed start saying, well, that's a good number. Let's see what the June number looks like, and that would be coming out in July. So pushing towards that way. I think the Fed, the committee right now, is at an inflection point. They just don't know it. They're at a point where we could be staying higher for longer, or we could be cutting rates. It just all depends on what the data is, and they've been pretty consistent in saying that for months now. Okay, so let's take a look at another couple of charts here. Dow Industrials just getting absolutely slaughtered here the last couple of weeks. I mean, from the time it closed at 40,000, just, I mean, that was just what, 1, 2, 3, 4, 5, 6, 7, 8 days ago. The Dow Industrials is almost down almost 2,000 points, right? Nobody's talking about it, but you can see it on the chart over here. This last 5 days has just been, the index has just been bludgeoned. We had down 600 here, we were down 300 here, down 200 here, and today we could be down another 300. So if you include today's action, it's down about 2,000 points. So if we open up at about 38,100 or something like that, that's about 2,000 points, or roughly 5% down on the index in Dow Industrials in about 9-10 trading days. Pretty substantial. Now, we had a similar type of a move back at the beginning of April, right? When we were hitting all-time highs back then at about 39,800, and we had a huge drop down to 37,800. So another 2,000 point drop in the industrials. We found our bearings at this 100-day moving average, which we just crossed under yesterday. If we can quickly recover above that 100-day moving average, well, then it might be something interesting to take a look at. I'm from Missouri on this one. I'm the show me state, so the industrials have to show me something before I'd want to get involved here. So we do have quite a bit of red candles over here, so that's a little bit concerning. And we did have heavier turnover on some of these days, so that is some institutional selling going on, folks. That's what that means. So let's take a look at another chart that we haven't looked at in a while. This is the new highs, new lows, and we've had some pretty good prints for the month of from February on until more recently. But one thing that I noticed here, take a look at it, yesterday was a negative print, minus 48 on the NYHL, which is the New York Stock Exchange high-low index. And as you recall, what we talk about here is we want to see prints above 0, right? And so when we do have prints above 0, that means the market health is in pretty good shape here. But when we get prints below 0, and especially when we get large clusters of them below 0, which we haven't had in 2024, we just had a smattering of them in the middle part of April, and we came right back up and moved back into the box. We want to be in this box if we're bullish, right? And that tends to tell us that more new highs are being achieved versus new lows, and that is something that we like to see on a regular basis if we're believing that the market is going to continue to go higher. So we've got to watch this indicator very closely here, especially if we start printing more numbers below 0. Don't pay attention to the indicators over here. It's just the prints that are in this box, either inside the box or outside the box, that matter the most. As far as stocks are concerned, everyone, we do have some earnings out after the close today. A name that we've done extremely well on over the past, few months actually, is DELL. And we've been on this name. I've been on this name since the stock was in the 70s here. And everybody in the chat room knows that we've been trading the stock. In the EO service, we've rolled it up 4 times already. The last one was done yesterday, and we're actually even up on that name, on that trade as well too, about 30%. So I'm more than likely going to take most, if not all, of my position off the table today. Am I afraid the stock is going to go down? I don't know, but you look at the chart. You tell me. All right, is this a game of greed, or is this a game of being prudent and smart and waiting for your opportunities? Well, I waited for my opportunities over here. Stock was kind of going sideways here, and it blasted off starting May, when the stock was about 120 bucks. It's 180. So you tell me, in a month, the stock's up 50%. Do we really think it's going to go up a lot more than that? I don't know. Probably not. I mean, it may go up a little bit. I'm going to keep it very, very light. I may even sell some upside calls against the long calls that I have and see how it goes. We also have earnings coming out from Costco, another one that looks like a lot like DELL, right? This is a stock that's at an all-time high. I do have some shares. I have some calls in this one, and this is another one that I've been rolling up, and I'm highly likely to take this, all of it or most of it, off the table today, because the good news may already be priced in. They may put a fabulous print out there, but the stock may fall 10, 15, 20 bucks, right? They may announce a price hike for members. Stock may still jump up and may jump back down $15, $20. We really don't know. The expected move is pretty high for Costco, as it is for DELL, and another name that has actually been pretty bearish here is ULTA. This stock got absolutely just annihilated here from the middle of March, when it hit all-time highs at 570. They came out with some news in April, and it followed through to the downside. Now stock's down almost $200 from where it was back then. So, if you're bottom fishing over here, maybe you want to take a look at it. That's not my game, but certainly, the stock chart is telling you what the earnings are probably going to be looking like. Okay, that's what stock charts do. They tell you in advance what things are going to look like. You don't believe me? Let's look at our friend Salesforce for a minute. Okay, now you tell me, was this chart telling you that the report and the response was going to be bullish? No, of course not, right? It looks at if it wasn't neutral, it was probably bearish, right? And so that was a play for you, based on what the chart interpretation was, based on what the chart was telling you, right? So so that's, I can't stress it enough. It's so important to pay attention to what's happening on the charts. Lots of different tools you can use to help you figure out what the direction is going to be down the road. So we also have earnings from Zscaler. Again, here's another name that is it's in that cybersecurity area. This is another name that's just been bludgeoned here. It's been punished from the beginning of February. It was about $260. It's down almost $100, 35-40% from those highs back in the beginning of February. Just been down to Chinatown over here. So is this a stock you want to get into right now? I don't think so. Right now, on the flip side, we did have earnings last month from Tesla, and it gapped up and came back to this 20-day moving average, and it's kind of floating around over here, building a nice base at a higher level here. Now, I'm not quite wildly bullish on this name, but certainly if it can get above that 100-day moving average, which call it around 183 right now, and it's quite a ways away, $6-7 away. But Tesla can move in a big way, and of course next week they're going to report numbers for May, and I suspect that after the last 2 or 3 months of really poor monthly sales, the expectations are going to be pretty low. The bar is set pretty low for Tesla on this next number, and they may just lift their foot up and beat the number. I do like the fact that it's held that gap, and it's pushing higher. It's just making higher lows and lower highs. That is a textbook definition of no trend right now. in Tesla. So if we can get above that high from last week and then above that 100-day moving average, then you got something to work with here. Again, I'm waiting, watching, waiting. When I tell you about a stock that I'm looking at that it looks interesting, it doesn't mean jump all over it at 9:31 Eastern time in the morning. It means watch, wait, listen, pay attention to what's going on with the stock. Observe. You need to watch and observe things first before you jump in with both feet. Okay. Let's see here. Google, which I unloaded yesterday. I do like the chart. However, the one thing that troubles me here is the fact that apparently they're going to they're probably going to push ahead and buy this HubSpot, HUBS. You can see that stock had a huge day last week, and then this week as well too on Tuesday, and even followed through on Wednesday. So it appears that their negotiations are getting pretty close. And if Google does buy this company, it's going to be a big acquisition, and they're likely to do it with stock. And what happens when they do it with stock? That means they dilute shareholders, and the stock is probably going to pull down sharply on that news. It may be a great acquisition for Google. I'm not arguing that, but I'm saying in the short run, it's going to probably hit the stock, and so what? That's why we jettison the name on Wednesday. So let's see here. As we approach tomorrow, end of the day, end of the month of May. May has been a pretty good month for shareholders of stocks, and even the bond market has been up a little bit in the month of May. Nice rebound from a poor month of April. So we'll see how things go in June. You know, that whole sell in May and go away. My good friend Steve Sosnick from Interactive Brokers wrote a nice article about this, that we really don't know if sell in May and go away is going to work until we hit June, right? A lot of people were thinking that, okay, April is going to spill over into May, time to get rid of our stocks in May, and boy, was that the wrong thing to do. But as we approach June, we get summer slowdowns, we get slower volume, we get a lot of erratic moves, higher volatility, and month of June is a tough month, only because there's so few earnings reports coming out, so few catalysts out there. Now, we do have one catalyst later in the month of June, and that would be the Fed meeting. They're highly unlikely to do anything at that meeting other than yap their positions and flapping their gums about monetary policy. But other than that, they're probably not going to act on monetary policy at all. And that's it. So listen, have a great weekend, everyone. It's been a short trading week. Again, really been enjoyable and great to spend a little bit of time with you. I'll see you guys all Monday morning, June 3rd, and it'll be the first trading day of the month of June, and we'll recap about what happened in May. I'll also take a look at that very important monthly chart of the SP 500, and I'll see you guys all on Monday. Trade well today, trade well tomorrow, and I'll see you guys all on next Monday. Have a great weekend, everyone. Bye. So I will ask you